Am I saying don't get an LLC? No, that's not what I'm saying. You want that protection and separation from you and your business. Now, this one's for free. If you're going to make that distinction and separate yourself from your business as a disregarded entity, you want to make sure that you don't do what we call piercing the corporate veil. If you have a single member LLC and that's separate from yourself, you do not want to commingle your income and your expenses. So yes, you're getting those payments. Maybe you don't have the business account set up. You need to get that set up ASAP. Don't keep putting business money in your personal account. Don't go shopping at the mall with your business funds.
Welcome to the Tax Relief with Timalyn Bowens podcast. Are you behind on taxes? Is the IRS threatening you or your business? Are you overwhelmed and confused about how to resolve your tax issues? Let's join Timalyn as she explains your options and how she may be able to help. Timalyn Bowens is America's favorite EA.
Hey, family. Welcome back to the podcast. In today's episode, which by the way is episode 31, can you believe it? I can't, so I'm going to keep saying it. But we've made it to episode 31. And if you caught last time, you know that I reiterated that I am working on filling the tax literacy gap and shared with you all how I plan to do that. So today's episode, we are focusing on preventative care, specifically for my business owners. We are talking about sole proprietor taxes in episode 31. And here's the reason why. If you're new here, you've never heard this before. If you've been here, you've heard it before, just nod your head and agree, okay? Over 90% of the clients that I work with that owe back taxes to the IRS and can't pay are business owners. A lot of those business owners are single member LLCs or, for federal tax purposes, sole proprietors. So in today's episode, I'm going to talk about what is a sole proprietorship versus an LLC, and then we're going to look at how does a sole proprietor get taxed, okay? One of the many, many questions that I get throughout the year, it'll be on YouTube, Facebook, Instagram, email, networking events, say, hey, Timalyn, I filed my personal taxes. Can you file my business? Anybody out there listening right now that's a tax professional instantly caught that red flag in that question, right? So the individual tax return is due in April. If somebody has a corporation or partnership, their taxes are going to be due a little bit earlier. But when getting this introduction, I usually find out that the person is a single member LLC. The red flag comes because that sole proprietorship should have been filed along with the individual tax return. Okay? So when you're a sole proprietor, you are filing additional forms, not something completely separate. But like I said, we're going to cover what a sole proprietorship is and then how it gets taxed a little bit later. So make sure you stay tuned so you get it right for yourself, okay? So first off, what is a sole proprietorship? Well, it's pretty simple. It's anyone or any business, I should say, because I said sole proprietorship, it's any business that's unincorporated, okay? I'm in Louisville, Kentucky. If I were to go downtown and set up a DBA, which is doing business as, I automatically am a sole proprietorship in the eyes of the IRS. But get this, we have overlooked sole proprietors who don't realize that they are a sole proprietor. If you want to make some extra money on the side, so you decide to drive for Uber or Lyft, you are a sole proprietor because you have an unincorporated business. Now you may be thinking, well, I didn't go into this to become a business owner. I just wanted to make some money on the side. Guess what? If you exchange a service for money, my friends at the government say that you are a business owner and sole proprietor. So with looking at that, there's a lot of confusion, especially if you look at Twitter LLC, S Corp, Instagram, and all the things. They say you have to have an LLC to be able to write off business expenses, which just isn't true. So when we look at a sole proprietorship, I want to compare it to an LLC, okay? I have discussed this in previous episodes, but I really want to hit it home here. An LLC, which is a limited liability company, is a state designation. It does nothing for you at the federal tax level when you are a single member LLC, okay? Now, am I saying don't get an LLC? No, that's not what I'm saying. You want that protection and separation from you and your business. Now, this one's for free. If you're going to make that distinction and separate yourself from your business as a disregarded entity, you want to make sure that you don't do what we call piercing the corporate veil. If you have a single member LLC and that's separate from yourself, you do not want to commingle your income and your expenses. So yes, you're getting those payments. Maybe you don't have the business account set up. You need to get that set up ASAP. Don't keep putting business money in your personal account. Don't go shopping at the mall with your business funds, because once everything gets all messy, let's say worst case scenario, you face an audit, you've pierced the corporate veil. Now we're going and taking a look at everything. So that protection, air quotes, goes away. Okay. So with that, like I said, it's a state designation unless you have multiple members. A single member LLC is the exact same as a sole proprietorship at the federal level. Why do I say that? Why do I not want you to flare up and argue with me? Well, you can go right to the IRS website and see that a single member LLC is going to also file a 1040, which is the tax form for individuals. But in addition to that 1040, they're also going to file what's called a Schedule C. With this Schedule C, that is where you report business income and expenses. And on that form, it doesn't say, are you a single member LLC? It says sole proprietor. Okay? So again, for federal tax purposes, you are still filing a Schedule C, even if you are a single member LLC. The next form you want to be aware of is Schedule SE. Now, I'm not going to go too deep into it because we have a whole episode on what self-employment tax is. And I even have a video on YouTube for how to figure that out. But I want to make you aware of this because this is one of the things that just catches up a lot of people that are new to business. Now, keep in mind, if you're feeling overwhelmed, take a deep breath. You're allowed to pause the podcast episode, but go get pen and paper. Because so far I've covered one form. And for this self-employment tax, the thing to keep in mind here is that this is going to be roughly 15.3% of any income after expenses. Okay? So your net income. This messes people up because as they're setting money aside for taxes, they don't take the self-employment tax into consideration. This is the self-employed person's share of Social Security and Medicare. So let's say, for example, you work a W-2 job. When you look at your check stub, you see that Social Security has been withheld and Medicare. You don't have an option. That's automatically done on your behalf. But what you don't see that's automatically done on your behalf is that your employer also pays into Social Security and Medicare for you to have those Social Security points. Well, once you become a business owner, you have the privilege of paying both halves. And like I said, that's roughly 15.3%. All right. So a lot of people will ask me, what is the sole proprietor tax rate? And there's not really a straightforward answer. It's going to depend. Reason being, we have to look at your business and income getting taxed at whatever tax rate your ordinary income is getting taxed. So you may have employment income. We have to add that into any investment income you may have. And then we're looking at adding your business income. Maybe you also have spouse income. We have to factor all of this in to figure out what federal tax bracket you're in. But one thing is for sure, if you're making under $132,000, that net income from your business, you will pay 15.3% for self-employment tax. Now, there is a form called a 1040-ES, and it helps you figure out what quarterly estimated tax payments are. This is very important. Remember when I mentioned just a few minutes ago, if you're a W-2 employee, you don't have the option of paying into Social Security and Medicare, right? It gets taken out every pay period for you. Technically, you shouldn't have the option to not pay into federal income taxes, but some of you all, mess with your withholding and it's not always right, but we'll save that for another episode. But what I'm getting to is that every pay period, taxes are withheld on your behalf if you have an employer. This is another privilege of being self-employed. You are responsible for your own withholding. And if you project that you'll have a tax liability of $1,000 or more, you're required to make quarterly estimated tax payments. Now, your tax liability and whether or not you got a refund last year, those are not the same thing. If you make more money than the standard deduction, you are going to have a tax liability, okay? If that amount is over $1,000, or even if it's just you need to make quarterly estimated tax payments, all right? So what I tell people, if you are working a W-2 job as well as starting your business, adjust your withholding. Let the estimated tax payments be made every pay period with your other money so you don't have to manually worry about it. But maybe you aren't. But making that big chunk of a payment every quarter, it's going to hurt. It hurts me and my feelings. The IRS isn't going to turn down your money. By all means, you can make estimated payments more than 4 times a year. Just make sure it all gets paid off before your taxes for that year are filed, okay? Now, again, I'm not going to go into more detail about it because there's a podcast episode about that you can go back and check out. And on YouTube, I even walk you through a 1040-ES so you can see how that form gets filled out in order to make your estimated tax payments. Now, everything we've covered so far has been from the federal level, but I do want to make you aware of the fact that if you decide to become a single member LLC, yes, for federal purposes, you are still a sole proprietor, but as a single member LLC, you open yourself up to potential state obligations. Now, I'm in Kentucky, so that's the example I'll use. At the end of this month, June 30th, we have what's called an annual report due. Each LLC has to update their information with the state, or at least confirm that it's still the same, and pay a $15 fee. In addition to that, at tax time in Kentucky, all single member LLCs file what's called the KY 725. And the fee with that form is $175. Now, each state is different, so you'll have to check with your Department of Revenue. I don't want you to be in California listening to the rates for Kentucky, because if you're a single member LLC in California, the fee that you pay is actually $800 for having a single member LLC. And yes, you do pay that every year, whether you have a profit or loss in your business. One last thing to make you aware of, you will also have local tax obligations depending on where your business is. And this is very important to stay on top of. Here in Louisville, Kentucky, we have what's called the OL3. For your net profit, you will pay 2.2% tax, okay? And it's probably why we have potholes and stuff that aren't filled up, because you guys don't know about your OL3 tax and you're not paying it yet, all right? But not knowing about it doesn't mean you don't have to pay it. Again, if you live in Louisville, Kentucky, you know that withholding for the city is not optional. As a business owner, it's technically not optional either. And what they'll do if you don't make those payments is they'll snag your business license. And nobody has time to get that revoked, right? So throughout this, I want you to remember that even as a single member LLC, you are a sole proprietor. Make sure that you're aware of the forms that you have to file, but check this out. You are probably amazing at what you do. Taxes, you should be educated about, but it doesn't need to be your main focus and what you need to spend all of your time learning about. I highly recommend that you find a tax professional that you can trust to get these forms completed for you. Just saying, this is not a plug for me because I'm not taking any new tax prep clients. But again, I do cover how to find a tax professional that is a good fit for you in a previous episode. Now, today we only covered sole proprietor taxes. I do have a course that I would recommend, Business Taxes 101, which you can find at americasfavoriteea.com, where I break down other business entity types as well, such as partnerships, corporations, S-corps, because a lot of people don't know what the correct entity is. And then when you don't know your obligations as a business entity, you end up being my client because you don't meet those obligations and we have to negotiate with the IRS. So make sure you get the help you need, because most importantly, back taxes shouldn't ruin your life. I'd like to thank you for taking the time to listen today. I'd like to thank Jim Ray Consulting Services for helping me get this message out to you. I hope you found the information helpful. Did you know 1 in 50 people have a tax problem? Please share this episode with your friends and family, because you never know who may need help. Again, thanks for listening. Hey, just as a reminder, this podcast is for informational and educational purposes only. It provides a framework and possible solutions for solving your tax problems, but it is not legally binding. Please consult your tax professional regarding your specific tax situation.